Welcome, Bitcoin friends. It's Bitcoin Mamo. Today we're going to look at the Bitcoin charts, do some TA, look at various time frames, and we'll also take a look at market cipher. So we're going to start here looking at the US stock market. This is the S&P 500 futures chart, and we are on the 3-week time frame. I think this time frame captures some important order blocks here. These are drawn in blue. These order blocks come from a single red candle in an uptrend or a single green candle in a downtrend. It's a break in a trend. Time was spent here and therefore volume, and these levels become of interest later on, acting as support or resistance levels. So we can see we have been basically ping-ponging here between these two order blocks, and we're yet to close above this 3-week order block. We are quite close to it at the moment. This candle won't close until the end of the week. We'll have to see if we can close above this order block. If we're able to do that, it's more likely that we continue with more upside. And it does look quite choppy here. It does just look like we've been going sideways. But to smooth out some of this choppiness, we can look at the more higher term time frames. And if we actually go onto the 3-month time frame here, it does smooth things out. And we can see it does round off the tops and the bottoms here. We did have two good 3-month candles here. And we did just open this next quarterly candle on the 3rd of April. So this does really look like the stock market has bottomed out here and we are in an uptrend. And if we were to look back at the 2000 stock market crash here and also the 2008 stock market crash, we can see we didn't really have two strong quarterly candles like this until we pretty much reached the bottom of these pullbacks. 2008, we continued all the way down with red candles, but once we got these two strong green quarterly candles, pretty much the bottom was in and we did continue higher. So I do think the bottom's in for the stock market here. We have had this nice rally. We have got support on these pullbacks. We are above the point of control here on the VPVR, the amount of volume traded at certain price levels. This red line shows the most amount of volume at this price level. We can see a decent amount of volume here after getting these rejections previously. And I think if we can close above this 3-week order block and above these volume spikes here, I do think we move up higher to the next spike, which is around this next order block, and that would also be good for Bitcoin. But onto Bitcoin now, we are also on the 3-week chart. We do have a couple of 3-week order blocks drawn in here. I think this one will be a key level. This one's at around 32.3K to 33K. We saw how this previous 3-week order block held as support on these pullbacks. When looking at these order blocks, we're looking at the candle bodies, not the wicks. So we're looking at where the candles close. We can see we didn't close below this order block on these attempted pullbacks here. And we did get bought back up before this candle closed. This order block did act as support and we did get a nice rally from that. And just quickly switching to the daily time frame. In that last video, which was a couple of weeks ago around the start of the month, we were in this sideways consolidation area. The last video was around this area, and I did mention I think we're going to have one more leg up, and pretty much not much happened since that last video until the last couple of days. We have finally seen this move to the upside. So now that we have seen this move, there is some stuff to talk about. What are the targets for this move? Where do I think we are going to have a pullback? We have had this strong move all the way from the bottom at 15.5. We had a nice pullback, which we did call on this channel from 25K to 20K. And I said from this point, we will go higher and make higher highs. So the next thing to find out is where are we going to see resistance? Where are we going to get more of a decent pullback like this previous one? And to do that, I think it's important on the macro scale to look at some fib levels. So just looking at the overall retracement here from the bull market peak to the bear market low, we see that 382 fib level coming in at 36K. And if we take the fib retracement from the top of this dead cat bounce after this correction down to our bear market low, we see the golden pocket here, which is the 618 level to the 65 level, and we see that it is in confluence with that 382 fib on the overall retracement. And when we do see confluence of fibs, these can become key levels. And if we also add in the 1.618 extension on this retracement from this high to this low, we do see that it does pretty much get that all-time high. So there is a lot of confluence here with these fibs. The main fib levels to use here are the 382 and the 618. This is based on the golden ratio, which is 1.618, and is found in many things and can be applied to markets. So this will be a key area I'm watching where we may get some possible resistance on the 3-week time frame. This is an important order block, but I do think we end up coming up higher here, with this range being between 36k and 37k approximately. But we'll go into more detail about this level on the other time frames. And going down to the 2-week time frame now, I've got order blocks drawn in for that time frame. You can see the 2-week order block down here also acted as support on these pullbacks like the 3-week order block did. And the next important 2-week order block is up here at 33k to 36k approximately. And it does touch those fib levels we spoke about. And we also do have one higher up at 42k to 38k. And we also see there was more volume higher up here on the VPVR. So I think this adds to the possible resistance level. These volume spikes go up to around 40k and they start increasing in size at about 35.5k. So I think this is a key area. We may spike into this order block, but I think with the weekly candles at least, we probably end up closing them around this golden pocket area. And then we do end up getting more of a correction here. And going down to the weekly time frame now, just looking at the retracement from the top of this dead cat bounce to the low. If we add that 382 fib in, as mentioned, these are the important ones, the 382 and the 618. And we did hang around this area for 3 weeks before getting on the opening of this week. This moved to the upside. And we have also drawn in the weekly order blocks here. We did have one here from this green candle in a downtrend. We can see we are currently above that weekly order block, which goes up to 29.9k. So if we are able to close the week above this order block, that would be a good sign. Perhaps we come back and retest it for support. If we then close back above it, it adds to the likelihood that we do continue higher here. And again, like the 2-week and the 3-week time frame, we have an order block here close to this golden pocket area and the 382 fib confluence. And this weekly order blocks between 34.8k and 35.2k. And then we do have one a bit higher around 38k. An important thing I'm watching in bull markets and bear markets is the weekly EMA ribbon. This is a collection of moving averages here. And basically, as long as we're below it, we tend to get resistance and push back down. And once we do break above it, if we are able to stay above the ribbon here, and eventually the ribbon flip, so the yellow smaller moving average gets above the red higher moving average, then usually once that happens and we get a pullback, we generally get support of that yellow line, which would be above the top of the ribbon. And just to show you an example here, this was the 2014-15 bear market. We got resistance from the ribbon. We got pushed back down. Once we did close above it, we started the next bull run. And we can see the ribbon flipped here with the yellow going above the red. And then on the next pullback, acted as support, normally off the yellow line. And we saw that also happened here. This time we wicked a bit lower. And basically we bounced off this several times in this bull run until we did reach the all-time high. It was very accurate here as a guide to when each of these corrections had finished. And we also saw that in the bull run before that. We saw on these pullbacks, we bounced off the EMA ribbon several times until we reached the all-time high. And once we closed weekly candles below it, it was the start of the bear market. So looking for a similar thing, we need to see this ribbon flip first. If we do stay above it for long enough, it will flip. And on a pullback, we would look for a bounce off the yellow moving average, which would be on the top of the ribbon. Now we looked at the order blocks on the 3-week time frame, the 2-week time frame, and the weekly. What if we were to combine all of those together? And I have also added the 4-week order blocks. I've drawn all of them in white, but the brighter the white color, the more that those order blocks overlap. So basically saying there is several order blocks in the same space here. And just zooming in, we can see one order block has this shade of white. When there is 2 order blocks, that's one of them. This is another one. We see this gray area is 2 order blocks overlapping, and this brighter white color is 3 order blocks overlapping. So it's that order block there, this order block here, and this larger order block all overlapping within this white area. And again, that is confluence, and this can become an area where we have stronger resistance. That area is at 34.7k to 35.3k, and it's also next to that confluence of fibs, the 382 fib and the golden pocket. We don't have much more overlapping ones until we get up to around 42k. This is the main area where these weekly order blocks overlap on several time frames. So we talked about the confluence with these two fib levels from the all-time high to the bear market low and the top of the dead cat bounce here to the bear market low. But there also is some other fib levels that do line up with this level. Just looking back at the previous bull run here, if we do take the previous bull market peak to the bear market low and we do a fib extension, so this is basically a doubling of this price range, we do see that it does line up with that same level, the 382 fib and the golden pocket, and that 2 times extension here. And also if we take a fib from the bear market low in 2018 to our bull market peak in 2021, we also see the 0.5 fib lines up pretty much exactly with all those other fibs. This is the 50% level on the overall bull run in 2019, 2020, 2021. So very interesting here, twice the extension of the previous bear market equals half the distance of the next bull market. And this also lines up with the 382 fib of our current bear market and the golden pocket from this dead cat bounce to the bear market low. So lots of confluence here. That's why I think this is a key level, and I think we will get resistance here and have more of a decent pullback. And if that were to happen, where would we pull back to? Again, I'm going to use some confluence of fibs here. And basically what I've done with these two fib levels is the first one here, taking it from the bear market low to this potential target area. We see that the 0.5 fib lines up down here at 26.1k, and then taking another fib from the bottom of this pullback to that potential target. We see the golden pocket in line with the 0.5 fib. And if we were to move both of these targets, these levels won't line up. So it is a specific level where we do see these fib levels line up on the same price level. So I do think we see something like this play out. Obviously, we can zigzag up and down a bit more here, but I think we eventually come to this target around 36k, and then we do get more of a decent pullback coming back to around 26k. Maybe we wick to 25k, which would also be the top of the range here, where we did spend quite a long time consolidating. And we do see how the top there pretty much does line up with that 0.5 fib and the golden pocket area. So just a way of predicting the market here. There isn't really a general pattern here with these movements. So we are looking at the fibs to give us some possible levels on more of a macro scale. And I do think we get support here if this does play out, and then we do end up making a higher high, or at least spending some time consolidating in this range. And we can backtest this idea of this confluence of fibs by looking at previous cycles. We can start here looking at 2 cycles back. This was the 2014-15 bear market and the 2015-16-17 bull run. So just looking at the overall fib retracement here, taking it from the bull market peak to the bear market low, we see that golden pocket area, and it got exactly the pullback here after this long rally. We can see this was a decent pullback here, then we consolidated for a long time. Once we broke that consolidation, we had this big move to the upside, and then we had more of that decent pullback from 770 down to 460. So around a 40-45% correction there. But we can see we made it all the way up to that golden pocket area. And now looking at the fib retracement from the top of this dead cat bounce to the bear market low, we see the golden pocket comes in around this level. It exactly captured the top of this run and also pretty much got the pullback area going from this golden pocket down to this golden pocket. And now looking at the retracement level, taking it from the bear market low to the top of this rally, looking at where we might pull back to. We see the 0.5 fib came in here. This was pretty much in confluence with that golden pocket, which is the move from the dead cat bounce to the bear market low. And looking again now from the bottom of this big pullback here to the top of this rally, we actually see the 382 fib level come in here, which is in line with that 0.5 fib level and that golden pocket. So if we were trying to project where this target might be, like we did with our current cycle, we could have taken it from the bear market low and also the pullbacks here and looked at where fib levels lined up. And in this case, the 382 and the 0.5 fib were in confluence, and that gave us a target up here when measuring these fibs. And we would have also seen that this was also the golden pocket from the bull market peak to the bear market low. So we can use these confluence of fibs to guess these levels ahead of time. So what other levels were there here that gave us an idea? If we look at the previous bull market here, if we go on the log scale, we can see this was the bottom of the 2011 bear market. This was the bull market peak at the end of 2013. We are on the log scale, so these fibs do look warped, but they are on the normal scale. And we see the 382 fib on this retracement comes in at this level. If we just switch back to the regular scale now, you can see that that 382 fib level is also pretty much in line with this 0.5 fib, the 382 and the golden pocket. It is slightly off, but it is within this small range between 450 and 490. So we can also add in one more level here. This was a big consolidation area. This bull market was pretty much one big run, one big sideways action, and then another big run. And this was actually quite a big range from 260 down to $44. So a mini cycle in itself. But if we do take it from the peak to the low here, we see the 2-time extension of that move does take us to that 470 level, which is in line with all of these other fib levels. So we saw lots of confluence again. And so as mentioned, that becomes an area that's important. And by looking at it here, we could have said that this pullback may come back to this area. And in this case, it did pretty much come back to those levels. And this was also the top of this run here. So there was confluence of retesting this level for support. So a lot of fib levels there. Hope that isn't too confusing. And just one other thing here. This is that level we spoke about, that 382 and the golden pocket, taking it from bull market peak to bear market low and top of dead cat bounce to the bear market low. And this is the area we think we're going to get to. And when we did project that and did a projection from the bear market low to that projected target and this pullback level to that projected target, we had the confluence between the 0.5 fib and the 0.618 fib. There is also one more other confluence when we do play around with these two fib levels, taking it from both of these lows. We do see the 382 fib and the 0.5 fib, which also lines up with this level, but that gives us a projected target here at around 32.6K, 32.7K. So these two levels are important, but I do think overall, because of more confluence with these levels, we do eventually reach this target at around 36 to 37K. On here it is at 36.8K, but I think this level is also important at 32.6 to 32.7K. So perhaps we come up to that level and have a small pullback, and then we push to that higher level at 36.8 before getting that bigger pullback back down to that 26K area.